G'day. I thought I'd touch on a topic which is an extremely important topic but probably doesn't get quite the airplay it should, and that is inflation and the cost of living. And as we all probably know, that it's measured by the Consumer Price Index, or CPI. So the Reserve Bank has a very clever calculator on its website that I had a bit of a play with, and I suppose to give you a bit of an idea of the effect of the cost of living going up and the effect that has on your money and what you can do with the money that you have. So I want to sort of relate back to a bit of a childhood memory. So back in 1982, I would have been 10, and I can still remember back in the days where go from the farm and you'd go in with Mum to do the shopping. I could still remember back in 82, Mum spending $100 on the big basket of groceries. Now we know we can't do that now. A big basket of groceries for a young family would be well in excess of that. But that's what you could do with $100 back then, and it seemed like a really huge big sum of money, which it was. So if we roll forward to the figures on the Reserve Bank calculator up to 2014, that same basket of groceries is now costing $330. So with my young family, that makes a huge amount of sense. Figures like these and sometimes above for a slightly bigger family for myself is costing that, or sometimes and more. So over that time frame, the 32 years, there's been an average increase of 3.8% over that time. So, and what I really want to relate back to in terms of investing in retirement is that as the cost of living continues to go up, and obviously this includes a lot of the 80s where inflation was really high, and some of the older people watching this will remember they were paying interest rates to the bank of possibly 14 or 15 or 16%, that inflation was very high. So in more recent years, inflation has been within the limits that the bank are happy with, and that the Reserve Bank, and that's between 2 and 3%. So hopefully we don't see very high rates again, but say it's running around in between their band of 2 and 3%, it still has an impact. And when interest rates are low like they are, and I believe they'll be low for quite some time, and you get a term deposit rate on your money of 2.8%, and the cost of living is going up by say 2%, and you're potentially paying tax on that income, you're really not going anywhere. And this is why investing into cash and conservative investments like term deposits and just cash in bank for a long period of time, I'm talking 5, 10, 20 years time, the rest of your life, there is a huge risk in investing in these conservative areas. And the risk is that your money's not going to keep up with this increasing cost. As living gets more expensive, your money won't keep up with that, and in fact will become stagnant. So very important. That's why where you invest really determines your outcome in the future, and you really are taking on a lot of risk by investing into conservative assets over a long period of time. Short term it's fine. You've got security over a short term, but longer term, it is an issue. Thanks for listening.